And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning live on Channels Television. I'm Ladi Williams. It's great to have you join us. Let's kick off your morning now with commodity market prices. Now, we see oil prices rose today as the dollar slipped, but we're headed for a hefty weekly loss, and expectations there will be no let-up in sharp U.S. interest rate hikes and the prospect of weaker demand from top oil importer China amid rising COVID-19 cases. Brent crude futures clawed back 67 cents to $90.45 a barrel, but we're not far off from a four-week low of $89.53 hit in the previous session. U.S. WTI crude futures rose 70 cents to $82.34 a barrel, but held near a six-week low. A slight decline in the dollar helped oil prices today as a weaker greenback makes oil cheaper for buyers holding other currencies. However, WTI is down more than 7% so far this week, while Brent is down nearly 6%. And to the grain market now, U.S. wheat futures dropped to a 2.5-month low today after the United Nations announced an agreement to extend a grain corridor for export from war-torn Ukraine. Soybean futures fell on worries about demand as top global buyer, that's China again, struggles with COVID-19 lockdown. But corn turned higher as a strong weekly U.S. export sales data offset early pressure from news of the Black Sea grain export deal. While the Chicago Board of Trade December wheat settled down about 10 cents at $8.06 per bushel after dipping to $7.93 for three-quarters of a bushel. That's the contract's lowest since September 1st. January soybeans ended down about 12 cents at $14.70 per bushel, while December corn settled up 2 cents at $6.67 for half a bushel. And the prices of 6 food commodities expected to surge by the end of this year to the first half of 2023, and that's according to projections by one of Nigeria's commodities market players, that's FTX. In its 2022 wet season crop production report released, FTX listed 6 commodities that include paddy rice, maize, sorghum, soybean, cocoa, and sesame. The report also mentions paddy rice as being the most susceptible to production and output pressures, facing close to a 22.47% decline in production volumes this year in the wake of the crisis-induced fertilizer price hike, while soybean and sesame will experience close to 6.5% increase in production levels. And a total of 133 million Nigerians have been estimated to be living in poverty, according to the National Bureau of Statistics. We released the 2022 Multidimensional Poverty Index yesterday. The figure, which represents 63% of the nation's population, shows that poverty index is mostly experienced in rural areas, especially in the north, with women and children most affected. The survey shows that over 50% of children across the country are affected by poverty. Take a listen.
Dimensional Poverty Index is bringing together top government officials, development partners, and key players in the economic sector to put forward the findings of the survey. The survey, which sampled over 56,000 households across the 36 states of the Federation and the FCT, conducted between November 2021 and February 2022, states that 65% of poor Nigerians, representing 86 million people, live in the north, while 35%, nearly 47 million, live in the south.
While the monetary measurement of poverty makes use of consumption expenditure as a means of determining the level of poverty, the MPI approach uses deprivation in basic amenities as a means of determining the level of poverty.
At the Ministry of Finance, Budget and National Planning, we will continue to play our oversight role as the government's institution tasked with policy and project designs, as well as the monitoring and evaluation of projects. In this context, the MPI will be used to systematically track progress against the Sustainable Development Goal 1.
The measure used to calculate the figure was based on the Multidimensional Poverty Index, MPI, and contains 5 components: health, living standard, education, security, and underemployment. While the report identifies Sokoto State as having the most poverty levels across states with 91% and Ondo with the lowest at 27%, children, women, and persons living with disabilities are worst hit. The figures come with concerns from development partners.
We need to understand poverty as a phenomenon that is affecting children in different ways, whether it is monetary or multidimensional.
However, the federal government says more investments will be made to change the narrative.
This is a report that pinpoints the level of deprivations and its intensity that confronts our citizens, all of them. Beyond this, it also provides substantive evidence of the positive impact of the multi-sectoral interventions of the Buhari administration, especially during the COVID-19 pandemic, which also demonstrated our commitment to eradicating extreme poverty in Nigeria.
The survey is then launched. This is expected to serve as a wake-up call to the government on how to allocate its resources and provide policies that will address the gaps identified.
And to assess this report now, we have Sam Chidoka, MD, Kairos Capital, joining us via Zoom. Great to have you on the program. Listening to that report, quite a staggering amount there, 133 million. What were your thoughts when you saw this report?
Well, first things first is to say that data is important. If you don't know what the problem is, then you can't prefer adequate solution. So the first thing that came to my mind was that it was good we invested, and we now know what the numbers are, what the figures are. You know, we've always had that discussion about 100 million Nigerians living in poverty. Now we know it's not 100 million Nigerians as far as multidimensional poverty is concerned. We're talking of 133 million Nigerians. So the challenge is even more. The last World Bank report I read was targeting that very soon we're going to get to 100 million in abject poverty. But now the multidimensional poverty report states we have 133 million Nigerians living in that type of poverty. So now it's easier to have targeted approach to solving the problem. So the first thing I'll say, kudos to having the data, but now a lot of work needs to be done.
Yeah, quite a lot of work. But in your opinion, how did we get here?
So we got here from over time of not making the right investments in the right things. I've always been the proponent of the fact that I don't have a problem with subsidy, but I think we're subsidizing the wrong things. I think that we're subsidizing fuel consumption, and I think that that's wrong to subsidize. Subsidy from fuel, in my opinion, should be removed, and we should subsidize things like education, like healthcare. So if you look at the report says that a lot of Nigerians don't have access to healthcare, don't have access to quality education, don't have access to water, clean environment, sanitation, and all of that. So if you take the quantum of subsidy, which from reports could be 6 trillion naira in the year 2022, and even invest 50% of that in subsidizing education and healthcare, I think the multiplier effect of that will be more than subsidizing fuel. So we got here from not making the right investments, especially in healthcare, especially in education. Today we have 4 doctors to 1,000 patients. That can't work.
Yeah, that definitely cannot work. But, you know, we've seen rising inflation globally, and we see central bankers, you know, battling, inflation right now with rate hikes. Looking at this number of 133 million Nigerians, poor, is this the best policy, for Nigeria, raising rates?
Well, so there's the theory of inflation, and if you look at it theoretically, it's a good policy to tighten when you have inflation. But again, I think that economics will tell you that there are different types of inflation, whether you have the demand side inflation or supply side inflation. So the way you try and manage it will be different depending on the type of inflation that you have. I think we have a supply side inflation in Nigeria, and tightening alone cannot solve. I think that we need to do more than tightening. So on the monetary policy side, the central bank and the monetary policy committee have done what they can do in increasing rates and trying to rein in inflation. Has it worked? Well, the speed of growth of inflation has sort of like beginning to taper down, but inflation is still on the rise. We're now at over 21% for last month. However, it's not rising as quickly as we saw in the last few months. But you need concentrated and coordinated effort from the managers of the economy. On the fiscal side, we need to see some, you can't be tightening on the monetary policy and then by ways and means funding the government with 20 trillion naira. It just doesn't align. So there has to be a coordinated and concerted effort between the monetary policy side and the fiscal policy side to try and rein in inflation like we've seen it. Because the more you tighten only and don't deal with the fiscal issues, then over time, the tightening will begin to affect even access to capital formation, begin to affect small businesses. They can't borrow anymore. If you go to borrow from a bank and the rate is 30%, what legitimate business are you going to do in Nigeria to pay back 30% and still make a profit?
And looking at the number, it did exceed, the World Bank's forecast. So looking at it, right now, 133, million people. Assuming, let's take for instance, the government is not, doing the right thing. How do you, as a person, lift yourself out of this poverty?
Well, so now the question is, what do you do regardless? So in terms of where we are today, households and individuals must begin to see that we have to have, first of all, multiple streams of income. We live in an environment now where the average household is not earning enough to pay their bills and pay school fees for children, put food on the table and roof over their head. You need to have a situation where households are sharing the responsibility. The theory of housewife is basically not fashionable anymore. You need to have a situation where the man is contributing, the woman is contributing, the grown-up adults of the family are also contributing. You need to also look at, this is not a time when only a 9-to-5 job might be enough. You have to find other streams of income. And just based on technology and based on the fact that I'm speaking to you from Yaba, you're in your studio, people can look at all manners of avenues to sell products. So I mean, people are selling products on Instagram, on Facebook, on Twitter, and all of that without moving from where they are. So individuals will have to be creative and find ways of covering the gap. Government cannot do it all. Agriculture is another way that we can look at. But I dare say that what we need to grow the economy is not subsistence agriculture. It is massive mega investment in agriculture that will help us in that space. But for households, you can at least cultivate what you eat.
What would you say, is the impact of this, for the Nigerian economy? What's the expected impact going forward?
Well, so it's a number that is key. Like I said, the data is good. If you fail to plan, you have planned to fail. And if you don't have the right data, you make the wrong plan, right? So data is good, and it's good that we have data. What this means is that the managers of the economy now know what to do in terms of the question we need to ask ourselves. 7 years ago, we started the trader money, giving money to SMEs, giving money to families, trying to give some, financial aid to those who didn't have the wherewithal to survive by themselves. So 7 years after the school feeding program, all of those programs, the question we have to ask ourselves is, are those programs working? If they're not working, we tweak them. Change is constant. The fact that we started something doesn't mean we must continue it in perpetuity. Now that we have data, my recommendation to government is to sit down and ask ourselves, the compulsory cash transfer that we're doing, is it working? If it's not working, change it. We've seen the fact that lack of access to education is what contributes massively to this multi-dimensional poverty. So feeding program, is it bringing children back to school? If it's not, we change it and we find another way to make it work. So on a macro level and even on a micro level, for the managers of the economy, we need to mine this data and we need to help use it in taking decision. The data is not just meant to be something that we launch, but something that should guide us in decision making.
But the report shows multidimensional poverty is more pronounced, in rural areas. About 72% of people are poor, compared to urban areas where it's about 42%. What do you think can be done to tackle that rural poverty?
So that's not unexpected. If you look at the structure of our economy and look at access to just basic infrastructure, the rural area, there are still areas in Nigeria that are cut off from some rural areas in Nigeria. They can only move their goods and services through water. They don't have roads or bridges to connect them to the farm, from the farm gate to the market gate, right? So we need to begin to invest more in rural infrastructure. There are still rural areas in Nigeria that do not have access to electricity. There are rural areas in Nigeria that don't have access to internet of any sort. So when I speak about selling your product on Instagram or all of that, based on lack of education, that they don't even know, they don't have access to internet, they don't understand how to do this. So you would expect that rural poverty will be more. What government needs to do is to do what China did. So if you look at China, there's a report from the Ministry of Finance of China of 4 decades of removing people from poverty. And I think that report is instructive for any country that wants to achieve the same thing, because they did it in the last 40 years. So one of the things they did was that they targeted the particular areas that they found had persistent and consuming poverty and opened up those areas, provided education. And please, when I talk about education, education is not just about teaching English language or teaching physics, chemistry, and biology. Education could be technical education. Education doesn't have to be formal education. So we need to invest in education in the rural areas, infrastructure in the rural area. We need to invest in putting electricity in the rural area, and just the general providing security for the rural area. Many of them are farmers, but with the farmer header crisis we're having, many can't go to farm. So you will see that the rural area will have higher poverty levels.
And looking at this data now, we have the MPC meeting coming, next week. How do you think this would, shape their decision going forward?
Again, like I said, for the MPC is targeted at monetary policy. And monetary policy in itself alone cannot solve the challenges that we face as a nation on a macro scale. It just cannot. We used to have an office called the Coordinating Minister of the Economy. We no longer have it. I recommend strongly that we go back to that, where there is that handshake between the monetary policy and the fiscal policy. The monetary policy is not a silver bullet that cures all. Because you see, economists are battling with exchange rates, interest rates, unemployment. All those things are the things that economists are battling, and you're trying to solve them. Most times it's difficult to solve all of them. What you can do is to try to reduce the effects of all of them at the same time, but not entirely stop. They're also battling inflation. So what the monetary policy I expect them to do is to continue the trajectory of holding back inflation, which has massive effect on households, because whilst the CPI points at 21%, food inflation is over 23%. And that's not good for an economy where 133 million people have a multi-dimensional poverty. So the monetary policy is just not enough. I would expect them to continue the trajectory that they've been going, but I dare say that it's just not enough.
Yeah, quite incredible having such a huge population in poverty and seeing prices, rise so fast at the same time. Thank you so much, Sam Chidoka, MD, Kairos Capital. It was great having your perspective.
Thanks for having me.
Now to our next conversation. We see Nigeria's inflation rate accelerated to a new 17-year high of 21.09% in October 2022, marking a 0.32% points increase from 20.77% recorded in September. Globally, inflation is rising, but how bad is Nigeria's inflation compared to other countries? Let's talk to Gbemisola Alonge now, Senior Economic Analyst at STAIRS, joining us via Zoom. Great to have you on the program.
Thanks for having me.
So it's been a steady rise in inflation even before the Russia-Ukraine war, right here in Nigeria. What is the real driver of Nigeria's persistent inflation?
Yeah, so before we go into what's driving it, I feel like it's important to mention that this year's inflation is, you already mentioned it's a 17-year high, but more importantly, month on month, we've seen inflation rise more rapidly than in the past. At the moment, inflation over this, the average monthly inflation this year has been about 1.7%, which means that inflation has risen by 1.7% every year, every month this year, compared to other years like 2021 it was about 1.4%. In 2019 it was less than 1%. Even in 2016 when we had a recession, inflation was around 1.4%. Average monthly increase was around 1.4%. So this year it's beyond just the fact that inflation is higher than it's ever been, but it's also been rising quicker than in the past. So what's really is Nigeria's, what's the baseline reason for the increase in Nigeria's inflation? And this is something that we've written about extensively at STAIRS. So if any of the viewers want to read more about it, they can check at stairs.co. But one of the major reasons is food inflation. Food inflation has always been our problem. How rapidly food prices rise in Nigeria has always been a problem. And more importantly, is also because, there's structural issues that Nigeria battles with, from transportation to production of food to, and by production, I mean like productivity of farmers, that hasn't been high because lack of access to finance, moving goods across the country is a problem. Storage is also a problem. So Nigerians are faced with, having to eat as soon as it's seasonally. When things like tomatoes are in season, you can go to the market and the price will be cheaper. As soon as, it's out of season, you see people struggle to buy tomatoes and things like that. And that cuts across different other food crops. But that's a major problem that we have. Food inflation has been, and until we see a rapid change or a drastic change in the agriculture ecosystem, it will probably continue to be a big problem for us.
And obviously, we see inflation, is rising globally. But, how bad does it get for a country that's more import dependent?
So the issue about Nigeria's import dependence is quite contestable because, compared to our peers in Africa and in other parts of the world, Nigeria doesn't import as much. But indeed, Nigeria actually depends greatly or imports quite a bit compared to how much we earn in terms of exports and compared to how much the diversity of our imports as well. So how does this affect us? Nigeria's issue with importation, or how imports affect inflation, is beyond just the fact that food prices or prices of goods and services are high globally, but then it also boils down to the restrictions that Nigeria puts on importation. So things like tariffs, things like non-tariff barriers, like closing of land borders and just closing borders generally, has really put a strain on our inflation. Also, exchange rates, on inflation and imported goods as well, has just hiked the prices of goods that are coming into the country. Also, the exchange rate. This year we know that the exchange rate has increased, and it's just been volatile significantly this year. And then there's been a situation of shortages. But one major area where we're seeing this the increase of the global prices on imported goods is in the energy space. So things like diesel, right? Diesel has increased. The price of diesel this year has practically doubled, and that has affected businesses. It has just affected a lot of things. So that's one area where we can actually actively see the impact of a global increase in prices. Also in things like cooking gas and other energy products. So indeed, Nigeria is actually facing the impact and really badly as well.
All right. How is the rate of growth? How's that playing into foreign investment into the country?
Do you mean growth or inflation?
That's the inflation rate, obviously. Yeah.
Oh yeah, the inflation rate. Yes. So I mean, like you said, and like we've agreed on, global inflation is high. It's very high, and we're seeing that in things like the global food index, and some other ways, right? So what that has done is across the world, we're seeing central banks, increase their interest rates and sort of fight the inflation. Many countries are facing like record high inflation numbers. There are countries they are currently seeing inflation numbers that they haven't seen in 2 decades. So, everybody's guard is up, and countries like the US are increasing their interest rates. The US has been increasing interest rates since like March this year, and has just continued to, and will probably continue to till next year. So what that has done for Nigeria, the ripple effect of that is that cost of foreign investment in Nigeria is now higher. So basically, investors who typically lend and borrow from the US to invest in countries like Nigeria or other emerging countries are finding it more and more difficult to invest. So that has caused our foreign investment sort of decline. Also, when you see that there's uncertainty in the global space, uncertainty in the global economy, foreign investment tends to reduce. So in Nigeria, for instance, our global capital inflow this year alone has reduced for the first half of this year was around $3.1 billion. That's different. That's like a far short from like 2020, even 2020, where the first half of the year we saw a total capital inflow of 7.2 billion, and in 2019, around the same time, first half of the year, we saw around $14 billion. So from $14 billion in the first half of 2019 to $3 billion this year. So certainly there is an apathy in like investing in Nigerian businesses. What that does is, it prevents banks and just reduces FX liquidity in Nigeria. If investors are not bringing in their dollars and foreign currency to invest in Nigerian businesses, or just invest in setting up businesses in Nigeria, what happens is we don't have enough foreign exchange for our exports. For our imports. We don't have for school fees. We don't have for so many other things that we need we need foreign exchange for. Then, the CBN operates a managed float system, which means that the CBN would then restrict access to foreign exchange. In the past, like around 2019, there was a surplus in the FX window, right, where the CBN and banks basically exchange foreign exchange. Typically, what happened was it was the CBN, the banks selling to the CBN, selling their excess dollars to the CBN. But since 2020, we've seen the banks sort of request more dollars from the CBN, and that's causing a lot of FX liquidity issues. Airlines don't have enough dollars, people don't have enough dollars to buy things, to pay for school, to it's just the FX liquidity, and just the continuous or even increased demand for the dollar has just caused the exchange rate in the parallel market to increase. So basically, the impact is globally the world is facing inflation like never before. So central banks across the world are trying to raise their guard up by increasing interest rates. This has caused foreign investment into Nigeria to decline, and then caused our exchange rates just sort of shoot up.
And obviously, we see, global investors trying to see if the next Fed rate hike won't be as big as what we've been seeing. But let's do a comparison now. Compared to developed nations and our African peers, how bad or how do you compare our inflation to those countries?
So, globally, right, I mentioned before that, inflation right now is everybody's problem, unlike before where it's an emerging market problem, and countries like Nigeria and Ghana, battling, while the US is enjoying 2% or even less inflation rates, right? Now, countries like the US, and the US currently facing 5% inflation rate, which is the highest they've seen in 2 decades. For the UK, it's even worse, right? Their interest rate their inflation rate at 11% is currently the highest they've seen in 41 years. So this is, for them, the inflation is just continuously increasing. Ghana and other countries in Africa, Ghana's inflation is currently 40%. So in Nigeria, right, we're just as bad as them, but we're not we're not as bad as them, but like our issues are still very significant. We can't just shy away from them and say, oh, because our inflation is not 40%, it's not that bad. Indeed, like compared to other countries like the US and the UK, because of how developed they are, ideally, like emerging economies, inflation is almost like a problem that they have to deal with because they are growing rapidly. So it's very difficult to see a country like the US have 9% growth rate, but an emerging economy is not too difficult, right? So because they're growing so quickly, inflation prices tend to rise quickly as well. So inflation is something that we basically have to deal with. However, the US and UK and other developed countries have not seen inflation rise as rapidly as it is now. So indeed, I mean, we're having it slightly better than they are because, I mean, this isn't something that they typically battle with.
Right, it's quite interesting. But how is the average consumer doing right now, in Nigeria? And do you have any idea what, retail sales are like now?
I mean, Nigerians are not doing very well. In the recently released poverty snapshot by the NBS, we saw that over 133 million Nigerians are multidimensionally poor, which means that they either do not have access to good food or don't have access to jobs or don't have access to basic things like, clean cooking energy. So Nigerians are currently battling with a lot. Consumer price index, which, we're looking at right now, reflects how much, prices increase for, basic consumers like you and I. And just the fact that it has increased by, the highest in 17 years means that Nigerians basically, and obviously income is increasing as quickly as well. So it means that Nigerians basically have to sort of ramp up their income or try to find other ways to sort of absorb the shocks. I mean, Nigerians don't have it well. It's difficult to measure. One way that we could have measured how well the sales would have been the Purchasing Managers Index, which used to be released by the CBN, but I don't think they released in the past 2 years. So it's difficult to actually gauge how people are responding to goods and to sales and just their basic needs at this time. But in all, like Nigerians aren't having it well. It's a quite difficult time for Nigerian consumers.
Quite difficult indeed. But what are your expectations? It's year-end festivities are drawing near. What are you seeing for consumer demand?
I mean, so consumer demand towards year end is typically high. It's higher than usual. So, I mean, this is the time when businesses tend to sort of pay their staff more. People plan towards the end of the year because first they expect, prices to be higher. One of the major causes of inflation in Nigeria is expectations, right? So if businesses expect demand to increase as a result of the festive season, they increase their prices as well, just to sort of make up for the higher demand. And what that Nigerians typically sort of plan towards that. However, this is a difficult time for everybody. Nigerians have been battling, unlike developed countries where they sort of get some sort of support. In 2020, we saw the various types of stimulus benefits that people in developed countries enjoyed. Nigerians don't have that, and a lot of businesses, as a result of the high cost of doing business in Nigeria, has sort of shut down. So this is going to be a very difficult time for Nigerian businesses and Nigerian consumers as well. But I'm confident that like Nigerians, because we typically prepare ahead of this season, it would be better than the rest of the year, but it wouldn't be as good as, pre-COVID times and just times years before.
All right, so much for the consumers and the producers, to do right now, and so much also, for the government. Thank you so much. That was Gbemisola Alonge, senior economy analyst at STAIRS. Thank you.
Thanks for having me.
All right, there we're talking about the state of the consumer. Now, let's look at how the investors are doing. Let's head on to the markets now. We have Aniete now with the details. Aniete, how are the investors doing? We just talked about the consumers. Now it's the investors' time.
Yeah, investors. Well, the markets across board, the three markets, the fixed income market, the equities, and the unlisted securities market, it is just a downturn for those three aspects of the market. I think investors are they're taking it quite easy because the macroeconomic environment is not favorable at the moment for many of the investors. most likely because of election is at hand.
Yeah, pre-election years
factors
are normally, quite
volatile. It's always treated with caution.
Yeah.
So that's a watchword, and not to mention the inflation figure, as well as the upcoming Monetary Policy Committee meeting of the Nigerian Central Bank. Okay, so now with that being said, let's head straight to the fixed income market, or that's where we start off from. The market, the bond market, it was mixed sentiment at the close of Thursday's trading session. This is what it turned out. Total number of deals carried out on Thursday's trading session. 25 deals were carried out at the FMDQ OTC exchange of the market. The highest concentration on this board was on the 27th of April 2032, which had 6 deals and the total value 2.7 billion naira. Flipping over to the Treasury bills market, the Treasury bills market was rather quiet, to not much of activity this week. It has been under law, rather, if you can have the Treasury bills market there. So the only instrument traded there was the 9th of November 2023, which has been more on the preference side so far this week. It was the lone instrument there. For the OMO market, it was subtle. It was just quiet, 10.2%. That's where the average yield remained. And of course, when we talk about the bonds market, we had sell-off on the January 2026 paper, which it increased by, the average yield there, it increased by 5 basis points. And then the market is also contracted at the mid-segment. That's because investors demanded for the April 2037 paper, and it fell by 3 basis points at the close of Thursday's trading session. Now, to give us more insight into the fixed income market at the end of Thursday's trading session and what to expect for Friday, let's talk to Moshood Kazim, who's an investment analyst at Meristem Securities. Thank you for joining us, Moshood.
Good morning. Thank you for having me. So, like you rightly stated, at the close of Thursday's trading session yesterday, we saw buying activities on the bond market. There was investors demanded mostly investors demand for along the short end and the back end of the market. We saw buying interest in that space, partly because of unmet demand at the primary auction that held on Monday. So we saw investors continue to take position in the secondary market in order to sort of meet those demand at the secondary market. Anyways, we actually saw the increased demand in those spaces, and in the treasury market, in the NTB market, we also saw there was muted activities in the treasury market. This were attributed to investors focus more in the bond market, and we know that the 269 billion debit that hit yesterday due to the amount that was raised by the DMO during the auction, the primary auction, has impacted liquidity. So that is those are some of the factors that have driven the market. So for today, we expect that reduced liquidity to actually impact the market. So we are expecting muted activities for today's trading section. And we know that next week is going to also be a very busy week. There's going to be the monetary policy meeting decision on Tuesday. We're also expecting the Treasury bill auction also next week. So we believe that the weekend, today's activity will be muted because of those factors.
Okay, so just one question in just 1 minute. Now, with the upcoming MPC meeting, which is the last for 2022, just in 1 minute, what is your expectation for the fixed income environment, and what strategies would you recommend for investors?
All right, so at the next MPC meeting that is coming, we expect the Monetary Policy Committee to actually consider some of the developments in the international and the domestic economy. So we know that globally, central bank have also been raising interest rates. the US Fed raised interest rate, Bank of England also raising interest rate. And on the domestic side, we saw the inflation report coming out with inflation continuing to accelerate to 21.09% year-on-year in October. So, of course, the MPC will be considering some of these factors, and these are the things that we believe they will consider in making their decision. So we actually expect them to raise interest rate at the next meeting. However, not as dramatic as it was in the at the September meeting, and that was partly due to the impact of their recent currency management strategy, which they have used to sort of mop up some liquidity in the market. So we do expect them to raise interest rates, but not as much as it was in the September meeting.
Okay. Thank you for that analysis, Moshood. And of course, we keep our eyes on that market. So that was Moshood Kazim, Investment Research at Meristem Securities Limited. So, Ladi, that's it for the fixed income market.
Right.
It's not a pretty picture there.
Right. So, yeah. but we'll come back. We'll come back to you for the equities market just in a moment. Do stay with us. This is Business Morning. Welcome back. Still watching Business Morning live on Channel Television. Now we're going to drill down on the equities market, talking about the NGX, and we have Anyete with the details right now. So it's 0.08 yesterday.
Down. The loan gain that was recorded this week, the third trading week of November.
Yeah, over 0.5%. That's gone.
Exactly. Ladi, remember I told you that this market, the fundamentals to sustain that rebound or an uptrend or a bullish sentiment is just not there. One, you don't have corporate or earnings announcements yet. And then at the same time, just investors are actually looking for a way to make more gains and then take profit rather than putting their money into the market, because everyone's being cautious at the moment, particularly when you take into cognizance that the end of year is the year is just about less than 44 days into the start of 2023.
Right. Looking forward to it.
Exactly. So now, with that being said, this is how it turned out at the close of Thursday's trading session. About 35.72 basis points, or what you call 0.08% decline on the all-share index, but it still managed to sustain the 44,000 level by just a few points there. Now, at the same time, more than 19 billion naira was knocked off from the previous value of the market capitalization of the NGX. 23.97 trillion naira is what it stands now. It has fallen all the way from 26 trillion naira to what you see here. Now, flipping over to the activity chart, to the sectoral performance chart, you see the reds have it there, particularly the banking subsector, and that's no thanks to profit-taking on the shares of Zenith Bank. It was the major laggard there. And then, of course, we also had a negative market breadth, 20 losers in contrast to 13 gainers. Now, the loan gain was recorded by the insurance subsector. Sometimes the insurance subsector is the one that always have the positive side of the market when the others are in the red. This is how it turned out. Now, moving over to the activity chart, you see the reds also have it. The total volume was down by 38.72%. Value was also down by 70.36%, while the deals was down by nearly 2%, 1.94%. Now, Transcorp was the most traded equity at the close of Thursday's trading session. It contributed more than 10% to the total volume of transactions of this volume for the NGX. At the same time, when you take a look at this figure, it's very small compared to what we have in the previous sessions. Normally, we would have more than 1 billion volume of shares carried out, but at the close of Thursday's trading session, it leaned out. At the same time, take a look at the value, just in the millions, not too much of activity there. Investors are being very, very cautious for the market that we see there. Now, at the same time, Unilever was the top gainer for the day. It went up by 10%, while Guinness topped the losers. It was down by 9.97%. Moving over to the smaller unlisted securities market, that market is still going down. The 711.61 points there, you see, has dropped all the way from what it used to be at about some 800, while the market cap has dropped all the way from the 1 trillion naira to what it is now, 935.07 billion naira. Now let's move over to the activity performance of that market. It's also not a pretty picture there. It fell in contrast to what you had on Wednesday. This is 38.54 at 58.45 million naira, while the number of deals carried out there was 14, and the stocks traded were just 5. Let's move over to the losers there. It had only one loser, and this is why the market was down. It was down by 1.47%, and the security there, that's Friesland Campina Wamco, the price has fallen all the way from what it used to be, about 68 naira to 67 naira. Let's move over to the top trades. Union Bank Property PLC was the most traded securities on the NSD exchange of the market. So, right. Ladi, that's it for that market.
Well, last trading day for the week today, what are you expecting? Your crystal ball?
Well, I think my crystal ball, it's regained its balance.
All right.
So I'm seeing it's still going to be kind of a mixed picture, but for the market, it might eke out some gains because, of course, the investors will be looking out for which of those value stocks has dropped to a level which they were expecting in order for them to buy and then not hold for long.
Right.
Of course, maybe on Monday we might see the market continuing in the bearish sentiment.
Right. But for today, your crystal ball says green, and I'm holding on to
I put a weight on that.
All right. Thank you so much, Nature. That was Nature there giving us the details for the markets now. So to another market now, we see Bitcoin there corrected lower below the 16,600 level and 16,500 level. BT remained well bit above the 16,350 support zone. Still a lot of pressure, on that market. If we look at the sentiments in the market there, extreme fear. We're used to this. Most part of this year it's been extreme fear, but we're trying to get out of this for a while now. But it's at 23 points this morning with all that FTX drama still weighing, on the market, and obviously investors looking out for what the Fed might actually do next at their next meeting. Market cap $836 billion, up 0.78%. We see volume lower today, $48.39 billion. This is down 18.87%. And Bitcoin dominance still holding that 38% level. We're used to 40%, but it's maintained this 38% for most part of the month. Now, let's look at the price of Bitcoin this morning, $16,800. Did start an upward correction there, up 1.45%. Volume lower than what we're used to when we see we've been seeing the sell-offs in the markets, $27.10 billion. Look at the price of Ethereum, $1,218, still holding that 1,200 level. And we have that next support at $1,000. It's up 0.88%. Volume traded in Ethereum, $26.49 billion. That's for Ethereum alone. Let's look at the top alts by market cap there. We see it's all green, but little jumps we're seeing for the top alts by market cap. Let's bring in Solomon Amunde now to bring us up to speed. Hello, Solomon.
Yeah, good morning, Ladi.
Good morning, Solomon. Great to have you. So, still the FTX drama, weighing on this market, still have the risk of contagion, and we're seeing that unravel, gradually. Looking at the market right now, are there still opportunities for gains?
Yeah, definitely. The FTX event actually presented lots of opportunity in the market. Because one major way to treat this market is actually to observe actions and reactions. So the FTX event actually was followed by lots of reactions guided by emotions. So for traders, they were able to anticipate these reactions and follow the money. They made them lots of profit. So looking at some of the opportunities, FTX crashed, which was a centralized exchange, and the reaction was people moving to decentralized exchanges and also decentralized wallet providers that would give you access to your seed phrase. So we saw Trust Wallet fly up by over 100%, and also SafePow and some other opportunities too. We're still expecting Coin98 to do the same, to move up. And we're still expecting like MakerDAO, which is also extremely low, to also do the same based on a DeFi platform. So there are basically opportunities as long as you can follow the money.
Yeah, following the money, not so easy. But we're seeing all that action for wallets. What about decentralized exchanges? I'm not seeing any movement for tokens like PancakeSwap, Uniswap. They're not really moving.
Yeah, those projects haven't started reacting yet to the market. The momentum right now is pretty slow, and the tokens that are still in the shoes are still the wallet providers. So afterwards, we'll see a brief transition to DEXs like the likes of PancakeSwap, BuySwap, and some other DEXs too that will start doing pretty well. So we're still expecting that to happen before the end of this year.
All right, but Solomon, what projects are you watching? Right now, what projects are catching your fancy?
Yeah, so currently, based on the market's condition, I'm strongly looking at MakerDAO, and I'm also looking at some projects in the Solana ecosystem because Solana was hit very hard. I'm looking at Media, and I'm also looking at Port Finance on the Solana ecosystem. These projects are extremely undervalued because of the crash of FTX, which affected Solana blockchain too.
Okay, well, good watch there. Obviously, there are always opportunities in a bear market, but at the end of the day, everyone is squeezed at this point, talking about investors. Well, thank you so much, Solomon Amunde, there, financial market analyst, bringing us up to speed. Thank you so much.
All right, thank you.
All right, let's flip over to the top gainers counter. We see Litecoin there, not seen that in a while, up 8.07%. We're seeing more of single-digit gains, this morning, showing that the market is not ready for that buoyant double-digit gains. Yeah, Chile's token there, 23 cents, up 6.03%. We know the Qatar World Cup, that's coming. I know Chile's is a big part of that. And we see Leo there, up 7.53%. Let's look at what the top losers counter is looking like. Solana, that's topping that counter, down 4.17%. And we see VeChain, not seen VeChain in a while. GT token there, that's for the exchange, down 2.12% at $3.63 per coin. All right, that's it on the market. That's how the crypto market is looking today. And that's a wrap on the program. Thank you so much for watching. Don't forget to join us at 1:30 for Business Incorporated for more updates and developments in the world of business. And remember, you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television, and flip to our videos. You can watch this again on other production from us. Thank you so much for watching. I'm Ladi Williams. Enjoy the weekend.